Welcome to Momentum Investing, property investing made easy. One of the world's top podcasts on property investing, bringing you the top experts in the field so you can learn firsthand what it takes to create passive income and take control over your financial future.
Hello, Momentum Investor, and welcome to the Momentum Investing Podcast. Have you thought about doing development deals, like larger projects, converting maybe a pub into flats, or office space into residential, or any kind of larger, even building on land? Well, those type of deals are really, really exciting because when you look at the numbers, they look really, really good. I've done my fair share of developments myself, and when you look at the figures, they're always super exciting. You're looking at full cash outs, and you're looking at making amazing returns and ROIs. So they're always super, super exciting to do. But when you actually start doing them, one of the big parts, if the property doesn't already have planning permission, the getting planning can actually be a lot more problematic than you might imagine. I've had multiple deals where we've worked on that we've bought prior to planning approval because we've seen the upside. Now, sometimes it goes really, really well. Everything goes through. The council just approves it, which is amazing, and we're always so thankful. But what do you do when the council says no? What happens then? Is your property now useless? Well, you can be put in a really bad situation. So what you're going to learn in this episode is two things. You're going to learn, first, how to not get that no. So how to avoid the no, how to get that yes, so that your project just goes perfectly and smoothly. And second, what to do when you get that no. And so I'm really excited about our guest here this week because David Kemp is actually, he is a planning consultant. That is the word. It's hard to remember sometimes, right? He's a planning consultant, and his specialty is getting that planning through. He is the one that has done it for me. So when I've had property deals, when we're looking for planning, we don't get it, I've asked David to come in and he fixes the issue. He is amazing at that job. He's one of the top in the entire UK. And so I'm so excited to have him on this episode to show you what do you do if you do not get your planning, and also what do you do to make sure that that doesn't happen and so it goes perfectly at once. So make sure that you take notes, or just make sure you learn as much as possible from this episode, because once you start doing developments, what you learn in this episode is going to be key to your future success. And even if you don't do developments, if you're doing HMOs, you could lead planning for that as well, or extensions. This is a very, very powerful episode that you're going to be learning from and being able to use for years to come to make sure that your projects go according to plan. So I hope you're ready. Let's get right into the interview with David, and let's make sure your deals go the way you hope. Welcome to Momentum Investing. We're here with David Kemp.
Hey,
welcome, David. We're so excited to have you. Thank you for joining us.
You're very welcome. Good to see you.
Yeah, so we're very excited. I mean, a lot of the people in our community are doing bigger and bigger and more exciting deals, which means obviously they're running up against planning. I know from my experience, and we're going to talk a little about one of the deals you're helping us with a little later, but planning doesn't always go according to plan. Pun intended.
Yeah.
So what would you say as a planning consultant? First off, what is a planning consultant? What is your role, and how do you help us kind of succeed?
Well, planning is not an academic exercise, and it's certainly not a science. It's an art, really.
Right.
And a lot of it is about advocacy. A lot of it is about putting the best case forward for your client as you possibly can. But right at the heart of it is using a set of rules, formulas, processes to unleash latent value in a development scheme.
Right.
Okay, so a site might be an office site, but it may have a latent value as residential. So our job as planning consultants is to use our nous about the system to release that latent value.
Right. When you describe it, it almost sounds like a courtroom drama where you're in there trying to present your case and win the case. Is it kind of, are you a bit of a?
Apart from it does come from my training. I mean, I started off as a surveyor, Although I have a background in property development through my family.
Oh, okay.
It's all run through the DNA of my family. My brother was in West End office agency. My grandfather owned property and was an investor in Bristol during the war, and then held property in the interwar years, in the after-war years as well. So it's kind of been very much part of us. But I was trained as a lawyer and practiced as a barrister for local authorities and as a solicitor for local authorities and in private practice for a while as well. But there is an old saying about the planning system by somebody who's often revered as the father of the modern UK planning system, Sir Desmond Heap. And It goes something like this, that planning without the law is just wishful thinking.
Right. So you kind of got the best of all worlds. You got the development background, the surveyor insight, and the law. And
I was a valuer as well for a bit of time as well. So I've seen it from different dimensions. But the reason why Sir Desmond said that is because we operate within a framework, and it's all about making a case. I mean, listen, it'd be the same in what you do. It's the same in what many of our clients do as developers. It's about making the best case that we can. And the way it was explained to me is that to a certain extent, we're all salespeople.
Yeah.
We're all trying to sell something, aren't we? We're all trying to either put across our point of view, convince people to buy something from us, or to understand what we're trying to say in terms of our idea, to sell a vision, for instance, to policy officers or planning officers and that sort of stuff. So, yeah, there is a lot of that. And also because we're all very busy people. As a developer, you'll be juggling so many different moving parts in case management, as we lawyers call it, or just being organized, and knowing where everything is, being able to organize a team. It's all part of the same thing. I mean, you can have the greatest case on earth, but if you can't organize yourself at all, and it just fall down around your ears as well. So some of the best people I've worked with over my career, they didn't do anything absolutely amazingly. They weren't particularly special. They didn't make any particularly smart points in law or policy. A lot of the time just had a good command of the facts in front of them and were able to organize their thoughts and organize their case and put it across clearly and succinctly to officers. And that's a skill.
Yeah, no, absolutely. That is definitely an acquired skill. But I'm thinking, as an investor, as a developer, how can because one of the challenges we have, obviously, often we don't buy things that have planning permission in place. Instead, we're buying things pre-planning with the hope to, for example, change a pub into a block of flats or a office conversion. So how can we predict before we get in, like what are my odds to get the planning through?
That's a really good question, actually, because lawyers are used to measuring things in percentage terms. In fact, that they are required to by their professional body.
Right.
Planning consultants are not. And I don't know why. Because the law can be just as difficult to predict as, or vice versa. The planning system can be difficult to predict as the law. There are times when you do have to put a percentage terms on it. I'd say the three most important questions for anybody getting into development to answer are what I call the three hows.
Right.
Okay, so how much will I get, or how much will I increase the value? Yep. How long will it take? Because that's going to impact upon your finance costs.
Oh, of course.
And of course, the first question, the how much and how, it doesn't just impact on GDV, but it also impacts upon build costs as well. Because when you're talking about increasing the size and the scale, then that's a function of the build cost as well. And then you've got the percentage terms and what's the risk? How likely is it? So how much, how long, and how likely? How do you assess that risk? Well, we have a three-step system as in our consultancy for how we do that. And I think you've got to start at a very, very high level. So if you're looking at an office to residential conversion, you'll look first at things like permitted development rights and prior approvals.
Right.
Excuse me.
And before we move on, just so everyone's with on prior approvals is obviously prior approvals. Has the council said yes to this before? But share a little bit about permitted development so people know what the permitted development rights are.
Okay, so in some cases, you don't need a full application for planning permission to get a change of use or to do any other form of development. And the rules for that are set out in something called the General Permitted Development Order. And within the Permitted Development Order, it breaks down into a number of classes, and it says that if you start in one particular use, then you want to go to another use, you can do that without needing full planning permission. That's part of our law, okay? Right. There are some of those rights that mean that you have to, in a sense, still obtain the council's approval on certain narrow list of planning issues. So office to resi, you still need to tick the boxes in terms of highways, flood risk, contamination and noise, for instance, okay? So for that reason, because you have to obtain that permission from the council before you do the change of use, that's why it's called a prior.
Right.
And then because you have to obtain the approval on certain narrow planning aspects, that's what's called an approval. So you put both together, that's a prior approval.
Right.
Some of those changes of use don't require the council's permission on a narrow list of planning issues. You can just go from one to the other. So changes of use above a shop, for instance, if you've got the first or the second floor, which you use as almost as a storeroom or office accommodation ancillary to the shop below, there is a class of use where it means that you can go from that space to up to 2 flats. But you don't have to qualify it or pre-qualify it in terms of transport, highways, or other issues first. You just make that change, and the law allows you to. Small HMOs, up to 6 people, to single dwelling flats or single houses, again, you can make that change. You don't have to pre-qualify. Those are not prior approvals. Those are permitted developments. You can go from one to the other, okay? And also on a symbol level, a new dormer or new ground floor extension or side extension to a house doesn't require you to tick boxes in terms of highways, flood risk, that sort of stuff. Not policy issues. They're more in terms of metric measurements, how far from the side of the boundary, how far from the neighbours, etc. So that's permitted development as well. So there's a slight nuance between the two there. So back to what we were saying before, you can use this system of law that helps to minimise the risk. Doesn't eradicate it completely because there's always grey areas in these areas. To minimise that risk so that we can then hopefully move over towards our desired change of use in a quicker period of time with a lot less risk. And that puts the percentage of risk up. And then when we look at it, as I say, in a 3-step process. When we've looked at it, is it worth a punt? So, you can't be very much more specific than that, really, at that very, very high level. But is it going to achieve what I call the big rocks, the principle of change of use, the principle of making a building bigger? Yeah. Then it's a question of just how much or how many units we can get in. And then that's the next tier down. That's a more serious level of detailed analysis. And then you start to get into pre-apps and planning applications and detailed.
So that's the first. So if I want to minimize risk, I'm looking at, does this fall under, the permitted development rules? If I realize that, what I want to do is bigger or different and isn't covered there, so I don't have that backing, what do I do then? How do I go, this is not going to work? Or how do I start thinking about my odds?
Then you start looking into the council's local planning policy. And the first thing you're going to look at is the local plan policy map. So there's a proposals map, which is online, and it tells you what the land is designated for, whether or not there's any specific policy designations in relation to that site.
Right.
So you would write those down, make a note of them, and then you'd go to the written part of the policies to see what policy guidelines are raised by or engaged by those particular specific designations.
Right. And what kind of things could that be? So, for example, if I'm looking at an old office building that I'm seeing, I want to convert this into residential flats, but for some reason it doesn't fall under any permitted development. But what could be said there about that?
Okay. Well, first of all, a common designation may be that It may be in a conservation area, or it may be in the green belt, or there are other specific area types of restrictions in relation to that. It may also be it's allocated for housing in that area, which would be a good thing.
Yeah, then it's like, wow, this is what they would like it really.
Exactly. It's not always negative. Even if it's not on there. And one step back from that, Dan, is that obviously if you think it is PD or prior approval, then you still need to check the council's website to see if there's what's called an Article 4 direction.
Right.
Okay. And there will be somewhere on the council's website, it's usually hidden under the section to deal with planning applications or how to make a planning application or what restrictions they have. They'll have a list of Article 4 directions. And Article 4 direction is, it's an instrument, it's a paper instrument that's issued by the council to withdraw permitted development rights or prior approval rights in specific cases in particular areas, okay?
Yeah, we talk about this a lot in like the HMO space, obviously.
Exactly.
Article 4 areas.
Same with office to resi as well. So you look at that, okay, let's say, for instance, there's no PD or prior approval for whatever reason.
Yep.
There are a number of other reasons it might be withdrawn away, but we're not going to get into all the details.
Let's go to the principles so we can kind of start seeing it as
exactly. Then we start looking at the proposals map. We want to check what specific designations there are. But even if it's blank on the proposals map for that particular area, then there's no specific policy, you'd still have to look back at the written part of the proposals and see what it says about what you're proposing. Now, what a lot of people do is they make the mistake of looking at the policies in terms of only one direction of movement. What I mean by that is I'm a developer looking at office to resi, and so it's moving into a residential classification, and I'm looking at the housing policies, and it says, we want more houses. Great, that's good news. That's easy.
Then we know that this is what we're looking for.
But we're not done. We're not done because a lot of people have a blind spot, you see. They're forgetting that where you have a gain towards some particular use class, you have a loss from another one.
Right.
Okay? So there's a bit of yin and yang to the whole policy system.
Yeah.
So you have to look at the planning policy in our example here in terms of the loss of employment.
Right.
The barrier here is not in terms of the gain of residential, but it's in terms of the loss of employment. And this is where there may be quite a few problems about office to resi, where you don't have PD or prior approval rights, because councils are often trying to safeguard their local economy.
Right.
And we might see that more and more as we get into what is likely to be a recession, I think, later this year, into next year. They're going to be concerned about how they're going to be able to pay for local services because they'll get less business rates receipts and all the economic repercussions of that. The government is looking at PD rights to try and loosen this area, but it is going to be an issue, and that is why when we're looking at measuring risk, we have to look at the policies from both sides.
Yeah. Right. So that's an interesting point, because obviously if you get there and you see they're looking for more housing, obviously most investors, our dollar signs will start lighting up in our eyes and we're going like, yeah.
Right. Yeah.
But that's an interesting point, is the fact that we are converting something. We're not just building on land. If we're not building on land, then it's obviously different. Yeah. But if we're converting, we're actually taking something else out of circulation. Okay, so what if we see that? So what if I'm in there, I'm looking at my it doesn't have permitted development rights. They want more housing, but they also want more offices, and I'm asking to change. What do I do now?
Roll forward maybe 6 to 12 months' time. That might not necessarily be a problem, because the government may have brought in a change to the permitted development rights.
Right.
What it's looking at doing is giving you the possibility of what's called permission in principle for just the change itself.
Right.
So you can perhaps even knock down an office and change it to residential.
Right.
Without having to prove that there's no demand for offices in that location anymore.
Right.
Okay? You'd still have to obtain a whole load of technical consents in relation to its scale, its size, its design, so on and so forth. But the main hurdle is the loss of an office function on that site at all. Okay,
Right.
so that's
so that would be the difficulty. Say if I'm looking at this before I'm buying it, then at this point where I see where in our hypothetical situation there where they want housing but they also want offices, at this point it's pretty much a wait and see game if the policy changes.
It's going to be, it's going to be very difficult unless there's already a history that it's been marketed for probably at least 12 months.
Right.
But every council has slightly different policies on the time frame it has to be marketed for.
Right.
And it has to be open marketed. It has to be done with a fair rent and a fair capital value and that sort of stuff as well. So there's a lot of...
You have to prove that it's been a serious attempt.
Absolutely. Merely going up to the agent, let's say it's assuming it's on the market. Not all of these are on the market, might be an off-market deal.
Yeah.
Even going up to the agent and say, what do you think about the office market in this location? The office market anecdotally thinks, well, I think it's pretty dead, and no, I don't think you're going to get it. Because, I mean, it hasn't even got Cat 2 lighting. It's tired. Needs a lot of refurbishment. Needs a lot of money spending on it. You're not going to achieve the rents that you need in order to make it viable, so on and so forth. So there's going to be no demand for it unless it's been proven through a marketing exercise over time. The council is still not going to grant that change of use. So,
which means I need to know that I need to know that the seller's already tried that route. Yeah. Otherwise, it's too dangerous to buy.
Unless you want to take the risk, buy it uncon, sit on it, and you probably only do that if you've got any sense if it still makes money on investment terms.
Right.
And you or your investors are prepared to sit on that, and maybe your exit will either be to sell it off on an investment basis and you haven't lost any money, or you might take the risk and so you can capitalize on any planning gain later on. But there's no way you can evaluate that. Or the other thing is maybe you do a joint venture with the owner if they're prepared to do it on a subject to deal.
Right.
And, they put in the value of the office at the moment and you share the uplift.
Yeah. So they would do the planning application and
well, you would probably do it in any event. They're putting in the value of their land. You're effectively working as a development consultant to them.
Right.
You're bringing in the skills and you're financing the planning exercise. It's almost like an assisted sale.
Right. Okay. I see how you mean. So what if I say, for example, now I'm going to use our deal as an example. Like, what do we do if things don't go according to plan? So, right. For example, the one you're helping us with is, it's a pub that was been empty for ages. And, no one wants to run a pub there. The council has said that they don't want pubs there. They want housing. So on paper, everything looked perfect to get it approved. But then it didn't get approved. So obviously now we're starting a whole process. I'd like you to kind of walk us through that process, because just because it's not approved doesn't mean the game is over. There is still a lot of cards left to play. So what can we do if they should have been approved and everyone's going crazy? It's like, it should have been approved and it wasn't. So what happens now?
Well, when an application is not approved, the first thing you do is you obviously go to the reasons for refusal.
Yep.
And then you'll look behind those reasons for refusal, which are they speak to you from the decision letter, but there's obviously a lot more information behind that. So you look to what's called the officer's report and delegated report.
Right.
And they will often send out clues from that say, well, actually, if you'd have, or they might imply if you'd have done this or this differently, then it would be okay, and we might be more minded to give you planning permission. They wouldn't necessarily exactly say it in those terms.
No, they wouldn't say, if you do this, we will say yes.
They're reading between the lines.
Yeah.
That's pretty much how it goes. So you have one choice is to resubmit the application, but this time ticking the boxes that they want you to tick. So you'd run a revised application.
Right.
But that could mean that you won't get as many units as you wanted in your refuse scheme.
Right.
If it's a fault in the methodology that you used for some reason, or the evidence that you had used for some reason, and whatever reason, maybe administrative reasons, the council decided that they weren't going to afford you any more time to correct those deficiencies in your application. They're just going to bring down the shutters, make a decision, because they just wanted to get it off their desks and so on and so forth. That's what happens. Sometimes that's what happens.
Yeah, they just said, we're done with this now.
Yes, exactly. Yes, they've got a caseload, and sometimes often they're not invested in a quality decision in the way that you are.
Right.
Okay, so they're just thinking caseload, case management, pressure from on high. We've got to just move this off our desk next.
Yeah, of course.
And in those cases, sometimes just have to go to planning appeal.
Yeah.
That's the situation we're in at the moment. We're going on to an appeal. That is, it's a submission of the same scheme. You can make certain tweaks around it. You've got to be careful about how much you start changing in terms of the plans themselves, because then it becomes a point that it's materially a different scheme.
Right.
And
it's a new application rather than
a new application. The planning inspectorate will not allow further changes to the plans. So you can add little tweaks for clarification or confirmation here or there, but you've got to be careful. There's no clear line about it. It's a question of degree, really. You get away with as much as you feel you need to try and get away with in order to put your best case forward.
Yeah.
So you put all that together, you fill in a form, it's online, you submit all the papers to the planning inspectorate, and you also have to submit your full statement of case, your appeal statement setting out all your reasons for appeal against the points that were made by the council, and perhaps also picking up on any third-party points. There may have been points by objectors which were not necessarily supported by the council's officer, but you need to look at those as well. And you put all this into the planning inspectorate, and then that launches a process whereby at the end of it, you'll have a decision which either supports or it dismisses the council's previous decision. Now, the planning inspector will be the final arbiter on this decision, unless there's a legal point raised, in which case you get legal challenges onto the High Court. But usually their decision is, it will replace the decision by the local planning authority.
Right.
So if they don't agree with the local planning authority has to follow that, unless they think that there's some reasonable legal ground that they can raise against the inspector's decision. So the inspector sits higher than the local planning authority.
So the appeal, once approved, if approved, is that is the rule. That is what.
Yeah. The inspector is also. It's worth bearing in mind that the inspector is also independent and impartial. A lot of people, a lot of developers can be concerned about that, particularly if they're proposing things where there's been a lot of local politics involved and a lot of objectors. And they say, well, is the inspector going to be affected by local politics?
Right, because obviously the local decision makers care about what the local inhabitants think, and it can be a political decision, not actually a correct decision. While the you can get that quite a lot. Now you can get inspectors who sometimes are perhaps persuaded by political points, not in the sense that they're put to them as political points, but they might be put to them as public benefit points. So with pubs, for instance, one of the issues that often comes up is to do with the loss of pubs as community hubs. Right.
Okay. Yeah. So, one man's lamb is another man's mutton. So you might think to yourself, well, I'm looking at this issue and it sounds a bit political to me, because you've got this community body who uses the pub and that community body who uses the pub, and they've spoken to their local councillor, and the councillor has interfered with the planning officer, and the planning officer thinks it meets with policy, but the politicians have interfered. And so it's entered into the political arena, if you like, and somebody's nobbled the officers. But then the way in which that can be framed to an inspector can say, well, actually, it's serving a public benefit at the moment because it's providing meeting space for this group or that group. It's providing opportunity for the local darts league, local pool league, that sort of thing. So they start to reframe the argument, not in a political sense, but in a public benefit sense. And that's how an inspector can sometimes be drawn along by those issues.
Right. So as the one making the appeal, you have to not only answer the direct like policy rules, you also have to address these more political questions as well.
Yeah, definitely. Yeah.
Right, exciting. So at what point would you recommend, I'm going to go back kind of to the beginning of everything now. As an investor, at what point should we be bringing in a planning consultant, would you say?
Well, I often get involved actually very, very early in the process, sometimes when clients are thinking of buying sites. It makes an awful lot of sense. I mean, why would you spend a whole load of tens of thousands of pounds of legal fees and
and maybe spend a couple $100,000 on actually buying the thing.
Even before you get that, the money you buy, you spend on other reports, consultancies, etc. When, quite frankly, a planning consultant can probably tell you within about an hour that it's not going to work in planning terms.
Right, which is obviously a lot cheaper to pay you 1 hour rate than have a solicitor work for 2 months before it comes out.
Exactly. I mean, I was in a situation, it was probably just before the first deal we did with an investor, and we saved the investor from losing or wasting about £6.5 million of purchase money.
That's a decent job, right?
Yeah. And
I usually say that the best deals I've done are the ones I chose not to do.
Yes, you often hear that, don't you? Yeah, it's very, very true. And it was a site down in Surrey, and it didn't have. There's there's set of rules. I'm not going to go into it, but certain sensitive parts of the country, ecologically sensitive parts of the country, you need an area of land which people can use for recreation, and certain developments within the catchment area of that land can borrow it as a local resource for their future occupants. And my client was about 90% of the way there to putting in a bid for this quite large office development, where he was hoping to be able to use it for residential, convert it to residential. Right. But he wouldn't have had the opportunity to complete that and occupy it because they wouldn't have had access to that local natural resource that I'm talking about.
Right.
And as a result, he wouldn't have ticked all the boxes that's required by local policy, local law. It's to do with conservation and habitats regulations. And so for that reason, it would have been almost rendered useless to him. It would have only had office value. I know that somebody did buy it not long afterwards, and I think that they got stuck with it for at least a year, 18 months. Right. I don't know what they did with it afterwards, whether or not there was more allocation that came forward, but we were completely vindicated in our reasons to tell the investor to step back from it. Yeah. And yes, okay, he spent a bit of money on legal fees, so on and so forth, but we've saved him a hell of a lot in deposit. And
that's the thing, is the difference between saving, that's sometimes on a deal. That's why we always tell all of our students, always do a structural survey when you're buying something, which, it does cost money to do it, but it costs so much more to buy the property.
Exactly. Yeah.
No.
I mean, that's very good advice. Not only for the reasons that it can unveil a whole host of problems in some properties, but also because it may give you confidence to feel actually there's potential to go up extra stories, and we won't necessarily have to spend an awful lot of money on reinforcing the structure.
Right. True. So they can open up opportunities in the building as well.
Exactly. Yeah.
That's the thing. So we're coming up on the end, but I kind of want to summarize this because these were some powerful lessons, and I think we kind of sped through them in a bit of a dialogue. So I just want to summarize some of the things that we talked about. So when you're going to buy something where you're going to change it somehow, so you would need some kind of permission. The first thing you look at is the permitted development and prior approvals from the council. Your next phase is to look at the policy, the local policies, and look at what is the designation for the lot, and also go in deeper and read up on what are they looking for in that area. Is it more housing, less housing, more something, or something else?
Yeah.
And then from there, it's really go out there and either, start the process. If everything looks good, buy it. But if it still isn't approved, well, then it's an appeal process, and it goes to a third party who's objective in it. So the political issues won't affect them for the political reasons, maybe we should say.
Hopefully not. Yeah, hopefully not. Yeah.
All right. Perfect. So that is a very good advice. And I think that makes it a lot easier for everyone to kind of look at, okay, so what am I after? What are my odds of doing this? And really, as you say, I think as with most people in the team, you want to involve the planning consultant as early as possible. I mean, much better to spend a little money paying you, David, early rather than coming to you later and finding out that I shouldn't have spent the hundreds of thousands of pounds I have, when you could have told me right away that this wasn't a good deal.
Yeah. Yeah.
And of course, if it is a good deal, you might be able to find, just like you said now, we might be able to go up. We might be able to go to the side. We might be able to do this, which means if I've already spent money on doing drawings and then involve you, and you come and say, hey, by the way, you could probably add 2 stories to this, and I have to go back and pay my architects once again to redo it. So the earlier you're involved, the better.
Yeah.
Did I kind of catch everything, you think?
Pretty much, yeah. Yeah. There's just one thing I'd like to add as well. We live in interesting times, and just thinking and reflecting about this over the weekend, news about COVID and a lot of the demonstrations we've seen as well, and people weighing up the risk of issues that are important to them as against how they perceive that risk to themselves physically and other people around there as well. There's been a lot around this. And we're living in a time when people are having to carry out risk assessments against themselves.
Yeah.
Every day. And as developers, we also have to do the same as well. So it's worth reflecting on how comfortable are we, or our investors, if it's not our own money, with the risk that we are looking at and the risk that we're going to be taking. And it'll be different for different people. It might be different for the same person at different stages of their property journey or looking at different properties. And I think you have to have a serious conversation with yourself and with your investors about where you sit in your risk profile, their risk profile sits.
Yeah. And
it will change as you go through a project as well. Yeah. You might be eyes fixed on one exit, and then the situation changes, and you might either be more bullish or more bearish as situation changes as well. So it's a dynamic environment. So risk profile and how we see that, I think, is really important in property.
Oh, I agree. I mean, if you're not the type who likes risk, you should not buy things that require a planning application. Buy them already finished.
Exactly. It's as an investment.
Exactly.
Yeah.
Exactly.
Yeah.
So, David, thank you so much for joining us. And I'm sure a lot of the audience here, a lot of our community will want to contact you because now they know they need a planning consultant early in their project. So how do they get a hold of you?
2 main ways. LinkedIn. And other social media. I'm also on Facebook, but if you want to contact me through LinkedIn, that's also fine as well.
Yeah. And is this David Kemp straight up?
Yeah, I can't remember exactly what it is, but you'll find me on LinkedIn in any event. It's /David Kemp. It's not a particularly complicated one. And also David at drkplanning.co.uk. That's David at drkplanning.co.uk, my email address.
Perfect. That's awesome. So, David, thank you so much for joining us. And thank you, everyone, for listening. I hope you take with you some of these lessons when you start looking at deals that need planning. And make sure you talk to a planning consultant as David. As you see, there is a lot of value they bring to the table. So, again, if you want to reach David, contact him on LinkedIn, David Kemp, or David at drkplanning.co.uk. Thank you so much, and I'll speak to you again soon.
Thanks, Dan.
Thank you so much for joining us for this episode, and thank you for listening the whole way through. We really appreciate it when you're this engaged and learn, because I mean this episode is so powerful, and it's something you're going to be able to use for years to come. You know, David is such a good planning consultant, so make sure you take these lessons that he showed you so that you understand what happens in order to get your planning, but also what do you do if you don't get your planning? How do you go through that appeal process and actually get it done anyway? So just because you don't get planning, your property isn't useless. It is actually still valuable. So make sure you take these lessons and implement them. Again, thank you so much for joining us for this episode. I'm so thankful for you taking the time to listen to it. And if I could ask you for a favor, can I ask you to go and give us a review on whatever platform you're using, if it's iTunes, Apple, Google, Spotify, or YouTube. Give us a review. Just let people know that you enjoyed this episode, that you enjoyed the podcast. It really, really helps us get the word out and get more people to learn these things, because as you notice, they're so important, aren't they? Now, if you haven't already subscribed, please do so as well. So if you subscribe, that allows us to send you a notification when the next episode comes out. You'll really want to see the next episode, because the next episode is with a great friend of mine. He is one of the most experienced investors I've ever met. He's done deals in all over the United Kingdom, Scotland, Wales, England, London, all over. He's done everything from small deals to big deals. When I met him the first time, he was actually in the process of buying an old police station. Well, not even an old police station, actually a live police station, and he would have been the landlord for the police. Now that deal didn't go through, but that tells you kind of the level at which this man is playing. He's going to be sharing with us some very, very powerful lessons next week. So I really hope you subscribe so we can send you that notification. It's coming out on Tuesday next week. And he's going to share with you, what do you do if you're, if the management agent if you're buying a leasehold property and there's a management company that's handling the overall service. What do you do if they're ripping you off, if they're stealing money, if they're sending invoices that they shouldn't? What do you do in that situation? I've been in that situation myself, and it is really, really difficult to handle. So that is going to be super, super powerful. In addition to that, he's going to share so many of his lessons about how to invest, how to raise finance, how to build a portfolio. This is an episode you don't want to see. The man we're going to be learning from is none other than Ben Chai, one of the most experienced investors I know. So make sure you're there. Make sure you subscribe so you see that episode. Again, thank you so much for joining us here today, and I'm looking forward to speaking to you again next week. And of course, if you're not a part of the Facebook community yet already, you're very welcome to join us there as the International Property Investors. You can find us on Facebook. I do live videos every single day. We do a Q&A every single week. We're here to help you on your property journey. That is our goal. That is our target. Thank you for being a Momentum investor. Thank you for being a part of this. Thank you for being here, and I'll see you again next week.